Howdy, lieutenants and economists.
The most volatile, evil, disgusting things on the planet, humans. If you have a video request, you can always go to assholeconsulting.com.
Yeah, I am gonna charge you, kids. And that is the importance of not fucking up.
You are such an asshole!
Back at headquarters, ladies and gentlemen. So now I can get back to work, bang out all this shit, and get it done. So, this is a request. If you have a request or you need some kind of consultation, guidance, or wisdom, or a swift kick in the ass, go to assholeconsulting.com. Now, consult you. And we have a actual real consulting where I had to economics again today. This is a repeat request, or a second request from the same customer. Hello, Aaron. Thanks for the work on the video. It's going to be helpful in evaluating decisions. I did want to find out what your thoughts were on the state of the U.S. economy. I know it's unpredictable, but I've got a gut feeling, the same gut feeling that I had about the stock market in 1999 and the housing market in 2005, that we are being set up for another failure. The detachment from reality in these two previous incidents was so obvious, I don't know why it was missed. I remember being tagged as a doomsayer. I was being told housing only goes up. I lived in Vegas during the boom. No amount of explaining what happened in Japan during the 90s or the S&L crisis of the 80s would sway anyone's opinion. This is a lot of people weren't even around then, or kids back when I was, at S&L bailout. I was the nut proclaiming the sky was falling and that housing markets were going to crash. Currently, I don't see how California housing can maintain the crazy amount of leverage required to purchase so much of this state's populace appears to be on subsidized something or other. Many are paying 50% of their income just for housing. I know I talked about buying and possibly bailing when it goes to crap, but the alternative of continuing to save up while renting seems like a good plan. 2, do you recommend another housing bubble? Or do you personally, guys, you gotta fucking write English. Do you personally another housing bubble forming out here in Cali? Do I personally see another housing bubble? That might be the question. Alright, let's, how do I want to attack this? Let's do the state of the U.S. economy. Then we're going to talk about bubbles and things. And then we're going to talk about the California housing market. The state of the U.S. economy is basically Europe. I know a lot of people, Schiller, Schiff, people are saying Schiff and all these, 2016 is the end, and I don't believe economists of that caliber say that, because good economists and Schiller, Schiff, those type of guys, they are good economists. So I think people are probably putting words in their mouth because, article 2016, like one guy says, dude, did you hear what's going to happen in July of 2016? I'm like, dude, no one fucking knows what's going to happen. So this, oh my God, these economists are predicting. 1, I doubt they really are predicting to that specific day or month or year. And then 2, nobody knows, and any economist that claims to, yep, it's going to happen now, oh my God, this is the year, they're lying. That's the guess. They say, well, it could happen because certain things may happen in the economy, like the budget has to be approved or something like that, I don't know. And if that doesn't happen, oh my God, then the shit will hit the fan. So there can be events that will happen. They say, well, there's a pretty good chance the economy might collapse if the government doesn't do this thing on this day it's supposed to. But otherwise, no real economist says, yep, 2016 is the year. Remember the Mayans, the Mayan calendar, was it 2012? And you'll see they're scam ass, like, top economists say 2015, Obama's gonna fuck everybody. No. So we don't know. But yeah, the economy is in a bad state. As I have calculated before, this is not my opinion, I have shown average economic growth has been decreasing. It's one of the greatest charts I've ever put together. It should be out there. But our average economic growth rate has gone from 4.25% to 2.5%. And especially with the past couple quarters of economic growth, it's probably even lower now than 2.5. It's like 2.25 maybe. And that's just because we've decided to become like Europe. We've abandoned free market economics. We've abandoned capitalism. We've gone with either crony capitalism at best, if not outright socialism. And you got to look at the quality and caliber of people. We are, the millennials are, I didn't think we could be any worse than my generation, and they are worse. Not only are they lazy fucks like the baby boomers and Gen X, they're psycho. Not all of them, of course. I mean, there are, of course, good Gen X or millennials. We know that. But as a percentage of the population, my God, we are spending $1 trillion a year educating these idiots, and they're all majoring in dumb fuckery studies. So they're not going to have any skills. There's tons of money being wasted. There is no future economic growth. We're allowing a bunch of immigrants from countries that don't share our culture, our work ethic, go straight on to welfare. Not all of them. Don't fucking, I know this one guy who came from fucking Guadalajara and he's not. Yes, thank you very much. Anyway, our stock, as you will, both native and immigrants, are not what it was back in the 40s and 50s. We're shit. We are a shitty group of people, and you should expect shitty growth rates. And on top of it, our growth rates are laughably probably inflated because we have spent so much fucking government money and ran up so much debt, and not to mention our monetary policy. Even with this huge amount of steroid boost that we've got from fiscal and monetary policy, from the government spending more than it makes, and the Federal Reserve just cranking out the printing press, we could still only manage like a 1.5% growth rate. Well, fuck, that's on us. Not us personally. I'm talking the fucktards that populate and watch, there's the fucking Vikings, man, and watch the Kim Kardashian show and actually give a shit whether Bruce Jenner has a penis or not. So that is what to be expected. I think the future of the U.S. economy is just going to be a slow degradation. We still have many institutions. We still have a lot of hardworking suckers, I'd say, by now. And a lot of people who are in debt, but by gosh, I gotta give my little sweetheart everything she wants. Nothing's too good for my little princess. Yes, I'll go work 65 hours a week to pay for the McMansion, dear. Yes, I'll get you another Audi 8, dear. I love you so much. Please don't divorce me and take everything in divorce court. So those are the veritable slaves that just keeps the lights on. God bless you. You nerdy engineers who busted your ass off and married a whore and got yourself a McMansion and cars you can't afford. So, we are the backbone of America. Otherwise, some really smart people are going gold. There are some bright spots with some innovations in technology. But in general, we'll be like Europe. We'll slow to inevitably a zero growth rate. We'll actually start to decline as the population further deteriorates. And it's just going to be shit. It's just going to be shit. So that's my prediction of the U.S. economy. It's going to be a slow decay. It's not going to be a crash. It could happen. We could have a crash. Anything can trigger a crash, like a war or something. But I'm thinking it's just going to be what Obama's tenure has been. It's just going to be a slow collapse and mediocrity and averageness turning into whiners and complainers. Now let's talk about bubbles. The way you measure a bubble, to see if there's a bubble, is you do a price to earnings ratio. This is the simplest way. I'd say it's pretty much the only way, because that's what you're comparing. That's what the definition of a bubble. You compare the price of what you're going to pay versus what you're going to get. And when it comes to investments, be it stocks or housing or bonds or whatever, there's some kind of income, some kind of profit that is generated. So for a stock, it's your dividends or your earnings or profits and whatever they pay out. So you have ratios, a price to earnings ratio. Compare your price versus your earnings per share. There's a dividend yield. You compare the price against the dividend. What percent of rate of return are we getting in dividends? When it comes to bonds, you look at your interest rate. Okay, what's the interest rate on the principal? You're comparing the price to your interest payment. And then when it comes to housing, even though you may live in your house, in theory you can rent that house out. So what is your price to rents? Okay, and that's what we compare the ratios. Now, I'd have to go and consult my old book, Behind the Housing Crash, and look at the figures. But in the build-up to the housing bubble, price to rent, well, I should probably have it here. Hang on, let me find it. Where is it? Is this it? Okay, let me take a look. It's a good book. You can learn a lot of, it's basically a book on economics, but I was writing it while before the housing bubble collapsed. Let me take a look at price to earnings ratios. Just bear with me. That's the federal funds rate. I'm so good in economics, I predicted everything. There's the price since inflation. Dow Jones crashed. Boy, I did a lot of research here. Geez, Clary, were you that good? Yeah, I was. Delinquency rate, charge-off rate. God, this is going back to memory lane. Maybe I should consult the table of contents. Economists. My ex was subprime. That's a great chapter. Critical booze. Praises. You know what? Fuck it. I want to say they're like 50% overvalued. So the price to earnings ratio was 50% above its historical average. Now, right now I don't see that in the economy. because I pulled California's data, but okay, let me finish. I apologize. Let me get it. So when you see a price to earnings ratio, a price to rents ratio higher than the historical average, and significantly so, that's a bubble. Now, whether it collapses or not is another thing. Like, for example, the U.S. stock market, the New York Stock Exchange, and NASDAQ, and all, they have been trading at about 50%, 60% overvalued. Historical PE ratio is 15. They're trading in like 21, 20 or something like that. A significant overvaluation. And it stayed up there because we have 401ks, IRAs. People throw monthly their money into retirement plans, not thinking whether they're getting a good deal or not. And more recently, with quantitative easing, we've lowered interest rates so low that corporations can borrow very cheaply and go and buy back their stock. So this drives up the stock prices regardless of what the earnings or the dividends or interest may be. So just because you have a price to value ratio, value meaning earnings, profits, rents, whatever, that's high doesn't mean the market will immediately be rational and come crashing down. Markets will remain irrational longer than you can remain solvent. It's a great quote. I think it was Alan Greenspan. So just because we're inflated doesn't mean the bubble, predict when the bubble's going to burst. You have no idea. It's going to take something, like the dot-com days. I mean, you're like, what the fuck? How long can it went on for a while. Now, as it pertains to California, I looked at housing prices in California, and I went to the Bureau of Labor Statistics, HUD, Housing and Urban Development. They have rental surveys they take, so you get an idea for what rents are. And I averaged in 2016 what their rental rates are going to be compared to 2008, compared housing prices. And basically, speaking California as a whole, it's not in a bubble because basically housing prices have gone up 20% on average. Maybe not in Ventura County, maybe not in San Diego, maybe they've doubled. I know that. I'm saying for all of California, housing prices on average have gone up about 20 to 30%. Rents since 2008 have also gone up about 20 to 30%. So that's not a bubble. The price to rents ratio has remained consistent. And of course, there'll be variation in different cities and markets. But as it stands right now, no, it doesn't look like California's in a bubble. Now, what may be perplexing you or flummoxing you, I like using those words, flummox. What may be flummoxing you is you say, well, how can people afford it? And I think what you're witnessing here is why I like to call the Florida Keys real estate economy or the KHOMA economy. I wrote a post about it, maybe I'll link to it. But when I was driving down to the Florida Keys, this was 10, 15 years ago, I was not the awesome, good-looking economist I am today. I was a slightly uglier, slightly not as good economist as I am today. I was driving down the Florida Keys, and I kept seeing for sale signs for these big, fancy houses. I could not for the life of me figure out how there were so many rich houses for sale. Like, if you were this rich, if you made that much money, you would not be selling. You shouldn't have financial troubles. Well, what ends up happening is there are certain markets, certain areas people want to be. And you see this in fancy downtown cute little towns like St. Joseph. Go to St. Joseph's in Michigan. It's this cute little thing on the lake. Oh my goodness. And every trophy wife and soccer mom wants to have her little boutique in downtown Vail, St. Joseph's, Wayzata, that's the town in Minnesota on our lake. But this is where all the soccer moms and the trophy wives, I want to open up a boutique. So what ends up happening is it's called KHOMA, K-H-O-M-A, keep her off my ass money. And a doctor or a lawyer or an executive will give his wife some money just to keep her off his ass. Here's $250,000, sweetheart. Go down, open up your fucking bauble shop. I don't care. Open up your fucking trinket store. Go do your consignment. Have you noticed this? Have you noticed? And then what you probably noticed, and a lot of people have noticed as well, is just like those houses in the Florida Keys, and just like the storefronts in these cute little houses in the little town, they're out of business in 1 or 2 years. And you're like, how the fuck do you afford the rent? Or sometimes it's just, how do you afford the rent selling trinkets? Like that rent on that store. Well, they're not affording it. They're losing money. They run out of the money. The husband won't cut them another check. And then, Daisy's Doilies goes away. And Susan Saran Wraps goes away. And then Bertha's Baubles goes away. And all of a sudden it's some other stupid broad's KHOMA money trinket shop. Same thing with residents and housing in hot real estate markets. A lot of people want to live in the Florida Keys, but there's only so much land. And a lot of people want to live in Southern California, but there's only so much land. And what ends up happening is because a lot of people want to live there and don't necessarily can afford it, throws off your price to rents. Right? Now, it will drive up rents as well because a lot of people want to live there. That drives up rents. But they don't bring the income. So you're kind of like, well, how do these people afford it? They are willing to pay 50% of their income. They're willing to pay 60, 70% of their income to live. I remember back in the housing days, there was, there's several instances. What was the one? They couldn't afford furniture. That's what it was. They had bought a house. Was it out here in Minnesota or was it somewhere else? They bought this big-ass fucking house. And they had to make appearances. So they couldn't afford furniture. So when they have a party, they rented the furniture. And these are people who got qualified for a multi-million-dollar home. So they had the money. They just spent a lot more to get into a house they really couldn't afford. So that's probably what you're seeing in California. The rents are up. Your housing prices are up. You're looking at people's incomes like, how the fuck do you afford living here? It's simple, they don't. Then they go back and live with mom and dad. Or they're like all the stupid hot chicks who thought they were hot here in Minnesota, and they're going to go to LA to make it as a movie star, and they find out there's a lot hotter chicks in California. They go out there, they go to New York. If I can make it here, I can make it anywhere. New York, New York. And then they get their ass chewed up by the city because they work some fucking shitty-ass waitress job, and they got to live with 7 people. And then they gotta leave. You say, well, wouldn't that drive rents up? No, because there's a bunch of other fucking suckers coming in from the city who also want, I can make it here, I can make it anywhere, New York, New York, and it never ends. So the coasts are like big town, you know, like, oh, I want to go to San Francisco, I want to go to Los Angeles, New York. So they don't have the income, but they will spend all of it on housing, and that drives up housing prices as well as rents. So that's probably what you're seeing is this KHOMA, Florida Keys economy. So many people want to live there. There's only so much land. It drives prices up. You see a ton of turnover. And so that's your KHOMA money. That's what you see with the chickies, storefront, you know, clothing shops that go in and out of business. And probably what you're seeing in California. So anyway, so no, I don't think there's a bubble. If you can afford a house, cool, because rents are great, you know, and you could always rent it out and make your mortgage payment. Hopefully, do your analysis. Always compare what you could theoretically rent it out compared to what your mortgage is. Hopefully, the rent is higher than the mortgage and tax and repairs and maintenance and all that other stuff and insurance. But yeah, I would definitely do that. You know, do that kind of analysis. But as it is right now. Doesn't look like California's about. Tomorrow it could come all crashing down. Someone's like, you said there was no bubble. Something could happen. Jerry Brown could say, oh my God, I love Castro. I'm selling California to the fucking communists. And then, you know, although you idiots in California, probably, oh, it's good. I like communism. What do you mean no private property? Huh? What do you mean my deed is invalid? But it doesn't look that bubbly. It's certainly nowhere near, based on the numbers, certainly nowhere near as bubbly as 2006, 2007. Nowhere near that bad. But, you know, anything can happen. But as it stands right now, the rents are there because basically there are so many stupid fucking people in this country and they all want to live in that shithole called California. So, best of luck to you.